The financial perfect storm is coming. You hear it in the news. It's the economy, spending, uncertain markets. You need to be sure that your money will last through the storm. Join certified financial planner Wayne Maslyk as he gives real solutions for this perfect storm. With a clear plan and the right guidance, you can be comfortable that the money you've worked for will still be there when you need it. Now here's your host.
And welcome, folks. We're glad you have joined with us. We are talking with Wayne Maslyk, certified financial planner with Great Lakes Benefits and Wealth Management in Sandusky and Sheffield. And we are talking, Wayne, about the perfect storm. We've been talking about this for a few weeks. It doesn't seem to get better. I see you wearing your cool man glasses today.
Yeah, I have my sunglasses on, right? The weather's been nice.
It has been nice.
I don't have a hangover. I didn't get in a fight. I don't have a mafia hit going on.
Okay.
I want to make a point. A lot of people, whether they have their sunglasses on or looking through rose-colored glasses, as the saying goes, it's time to wake up. I mean, there's some things happening. We have a stock market that took a lot of wealth away from people recently. We've had a lot of folks, losing sleep. They very uneasy about their money and their life savings, their retirement accounts, and really concerned about what they should do. You had people going to cash in the middle of all this. You had people afraid, wondering what should they do. And frankly, this show is about the stock market today. It's about the perfect storm. We have inflation, high inflation to come. We know that. We have a very volatile stock market that can take wealth away quickly. You have higher taxes coming down the road, and we pay a good fair share of taxes now, and we have longevity. People are living longer.
Sure.
So it's time to take off the glasses and get serious about this perfect storm, and these people really need to get their financial house in order.
Absolutely. Well, in this country, we've just gone through a situation where we had the debt crisis, this debt ceiling crisis, if I can use that term. I heard a news guy on TV the other day, one of these commentators, he said, all I know at this point is I lost 14% of my wealth.
Right, quickly.
Just disappeared overnight.
Yeah, absolutely. And for people that were more aggressive with their investing, they lost more than that. For people that had toned down portfolios, well, they didn't lose quite as much. Right. And we'll talk a little bit about that today, too.
And the whole point of what you are trying to get people to understand is for them to pick up the telephone, give you a call, come in and sit. You're going to do some things on the board today to explain to people how they can better weather this coming storm, because it's coming. It's
coming, and you can't make just haphazard, quick snap decisions. You can't make emotional decisions. You really have to put a plan together, I guess a series of steps that fit you and your family to get the risk down, get the rate of return up, get a hold on the taxes, and really put all this together. Today we're going to focus on the stock market and how to tone down that risk, and if you should tone down the risk. Some people are okay with their market positions. Others really need to get serious about toning down their risk.
Right. Absolutely. Well, when we come back, folks, we are going to go to the board, talk about the stock market, talk about the volatility that is there, and what you can do specifically in your position. Now, when I say that, it's not for a specific person, because everybody's situation is different. I need to clarify that.
Yeah, I mean, everyone's situation is different. We are going to be talking about some specific strategies today. We are going to give away a free report at the end of the show when people call. That talks specifically about some of the strategies we're going to review today.
The financial perfect storm is coming. High inflation, rising taxes, market volatility, longer life expectancy. Let certified financial planner Wayne Maslyk help you create a custom plan to navigate through the uncertainty, not just a sales pitch. Schedule your appointment with Wayne today by calling 866-626-3990 or visit today'sretirees.com. Remember to request the free book, Tax-Free Retirement, when you call. That's 866-626-3990 or visit today'sretirees.com.
From reading in the papers and stuff, and especially like now with Greece almost going bankrupt, the stock market is very volatile. So not only do we have to worry about our country, we have to worry about all the countries in the world. And now China has their currency fixed, so they're at a advantage over us. And so, do you really trust the market? Because it's up and down, up and down, up and down, not like years ago. So you think, well, okay, I want to make some money, but I don't want to risk my money that I might have to go back to work because it's so volatile out there. So you try to look at where you can put your money in a safe place, but hopefully make a little bit of money too. But you don't want to go backwards.
Now, Wayne, as we were listening to this clip, talking about the stock market volatility, this is pretty typical, isn't it, of folks of this age group who have some money they have invested, their retirement funds.
Yeah.
They are pretty nervous about what's going on.
Oh, absolutely. Well, these fine folks are clients, and years ago they came to me with the same concerns with market volatility. And we had put things in place and strategies that eliminate a lot of the market volatility, but still allow folks to get a respectable, fair rate of return, which is just what people want. Most people out there aren't greedy. They're not trying to hit home runs in the stock market. They just don't want to lose, and they want a reasonable rate of return. And that's what I do. That's what I help people do.
When you read the newspapers, you listen to the television reporters, and maybe you watch CNBC or one of these shows on television. That's not what you're hearing. What you're hearing is the volatility, number one. Number two is if you have money, it's earning 0.1% right now.
Well, if you have it in cash, if you have it in the market, you're losing money now.
Right, exactly.
But what point I want to make is just regarding their market money today, we won't talk about their cash and other things. We'll save that for another show. But regarding the stock market, if these listeners out there and viewers on the television, if they've been losing sleep, if they've been nervous, if they've been contemplating just pulling out of the market during these rough times, they probably have too much money in the market. Okay. And that's the key. The very first step is to make sure you don't have, for sure, all your money in the market, but you have to have, if you're going to be in the market, just a reasonable percentage of your total investable dollars. Okay. And we've talked about the rule of 100 in the past. If you're 65 years old, 65% of your money should be in safe accounts, and then you can go ahead and gamble with 35% in the stock, that type of thing. Right. And everyone's different, every family's different, but that's a good starting point. But if you were uneasy and really nervous, some people get upset to their stomach, some can't sleep. First thing they do is turn on the news in the morning. As soon as they get home from work, they say, well, what did the market do? If that's you, then you really need to tone down your market exposure and tone down the risk. And there are strategies out there where you can still make a nice rate of return safely, and some of them, which we'll talk about here in a minute, even link to the stock markets. Okay. In other words, if the stock markets have a profit or a gain, you actually participate in that profit and that gain. So you're not out of the game. You're just approaching it in a different manner.
And you're making this more secure for your family.
Your family, your nest egg, yourself, your peace of mind. Yeah, when you don't lose, when you don't go backwards, like the folks we're just talking about, they don't want to go backwards. Right. Going backwards is not a good thing when you're done working and you're not saving anymore. Right. Then just to catch up, you're at the mercy of the market again. So, absolutely. So you definitely need to tone down your market exposure, but you still have to get a nice rate of return.
Right. And if they call you, they can pick up the telephone, they can email you, Wayne at todaysretirees.com. They can dial the 866-626-3990 and set up an appointment. Call and talk to one of your office ladies and say, look, I want to sit down with Wayne. Right. And I want to talk about what's happening. Because if, just a few short days ago from when we taped this program, the stock market was down 400 or 500. And then the next day it was up 400 or 500. You don't know what's going to.
See, but this is the key. If you're down, like the market was down, the one day, 630, something like that, 600 points in a day. That's a lot of wealth going out the window.
Yes, it is.
you remember we talked about when the market drops a certain percentage, it takes more of a percentage to catch back up.
Right.
Because the upside swing is on less money.
Right.
So you can go down 10% and up 10%, you're still not back whole.
Right.
Because the ride up on 10% was on less of your money.
Correct.
And that's where we're at now. So it's very important not to go backwards when you're in retirement.
Right.
And one of the vehicles and strategies we use, we've talked about in the past shows, is what's called a fixed index annuity. I don't know if you remember talking about those.
I do remember that.
And when we come back, I'll go to the board and show these folks how it works. But what it does is it allows people to link to the various stock market indices, the S&P 500, the Dow Jones, the Barclays Bond Index, the 10-year U.S. Treasury Index, the Russell 2000, the NASDAQ 100. All these are available for people to participate in without risk to principal.
Okay.
So when the indexes are on a rise and they're bullish and there's a gain, the investor makes money.
Okay.
The beauty is when the indexes are down, the folks never lose a penny. So you can actually link to these markets without risk and have a guaranteed principal base and a floor under your feet so you never go backwards. And then when we have profits in a given year, those profits get locked in at the end of the year, and those can never be taken away.
Okay.
So I'll get specific when we come back here in a couple minutes on the board. But this is just one solution.
Sure.
Some people think, well, where am I going to go? There's no place else to go. I have to be in the market.
Right.
So the two things, one, you can tone down your exposure in the market. Then you can tone down the overall risk of what you're using in the market.
Sure.
The two main steps to just take it easy a little bit because of that perfect storm.
Right.
You know, if we just had the market to worry about, fine. But when we have inflation and higher taxes and our money has to last longer,
sure,
it's more important now to get a handle on your stock market money than ever before.
Right. Well, as we have seen and as we have talked, you know, we know that inflation is coming. You can't print money. They're talking about QE3.
Absolutely. We've been talking about that for a year now. That QE2 was over, and QE3 is coming if things didn't turn around.
Right.
So it's coming, and eventually that's going to bring inflation. Now, inflation's not all that bad. We've talked about that before because it does allow the other interest rates on our savings to be higher.
Right.
So sometimes we'll welcome some inflation just to get higher rate of returns. But yeah, it's coming.
But all of that is working against us if we are not prepared for the storm.
Absolutely. You have to have all your ducks in a row. Your financial house has to be in order. Not one area is okay, but the others are a mess. Everything has to fit together.
Right.
That gives you the peace of mind and there's the knowledge and feeling that, hey, you're going to be okay through all this.
Sure. And that's why it's important for folks to pick up that telephone.
Hey, call and set an appointment. Call and request the book, Tax-Free Retirement. Call and request this free report that we're talking about today on these investments that allow you to link to the indexes, or just come to one of the workshops, right? Or even some people just call just to ask me a question. Just call on the phone and say, hey, I'm doing this or doing that. It's pretty easy. You just don't want to be complacent.
Right.
You take some action, take that first step, and pick up the phone.
Right, because I know a lot of folks are probably sitting there and saying, well, I don't know what to do, so if I don't know what to do, I do nothing.
Do nothing, exactly.
And they're losing big time. They are losing money because every time, like you said, every time this stock market dives and comes back up, you have still lost, even though the fall and the rise were the same. You still lost money.
You're still the market. You have to actually do better on the way up just to get back even.
Just to get back.
This time of the year too, it's tough. You get people gardening and going to the beach and golfing and boating. Your money's important.
Right.
You have to peel some time away. If you had something wrong with you where you felt you had to go to the doctor, you go to the doctor. You take off work. You adjust your schedule. You rearrange your day and you go. It's the same with this. It's that important that people really need to take time and sit down and address this.
The financial perfect storm is coming. High inflation, rising taxes, market volatility, longer life expectancy. Let certified financial planner Wayne Maslyk help you create a custom plan to navigate through the uncertainty, not just a sales pitch. Schedule your appointment with Wayne today by calling 866-626-3990 or visit today'sretirees.com. Remember to request the free book, Tax-Free Retirement, when you call. That's 866-626-3990 or visit today'sretirees.com.
Unless you've got something that's returning enough money to hold you harmless against the increasing cost of inflation and taxes, you're sliding downhill, and the slope gets slipperier all the time. So I think through investments, through cutting back our own expenditures, we need to be very careful that way also. There's no free lunch. Somebody has to pay.
All right, Wayne, we're talking about inflation, stock market, longevity, the perfect storm that's coming. And folks are concerned about the stock market volatility, what we've been talking about today. And I see you've put your glasses back on. Folks are...
Yeah, this last few weeks was a wake-up call to people. You really got to take your sunglasses off, take the rose-colored glasses off, and get serious about the stock market. Yeah, because just imagine, we've got some rebounding of the market, but imagine if it didn't rebound.
Right.
Imagine if we had '08 all over again, just 3 years later, what that would do to folks' portfolios.
Sure.
One of the main things or objections that I get when people are considering reducing their risk in the market is, well, what do we do with the money? Where else can we go? Right. CDs are paying 0.5% or 1%. Right. You have to earn something. So I'm just going to give one solution on the show. I'm going to give an example of a strategy that we use. It's called a fixed index annuity. We've talked about them. We've talked about all the different strategies over the past months. This is just one of them. I'm going to refresh people's memories on the fixed index annuity. Now, one thing you want to understand is when you invest, say you invest $100,000, that principal is safe. It will not be affected by market fluctuation. That's why they call it a fixed index annuity. The principal is fixed and guaranteed. So I never have to
go to bed worrying that I'll lose any part of my $100,000.
Correct.
That will always be there.
Correct.
Okay.
Okay.
That's a good thing to keep in your mind.
Absolutely. And the state of Ohio, actually the states back up these investments too, up to 100 grand. So not only do you have the guarantees of the companies that we use, which are financially strong companies, but you also have the backing of the state.
Okay.
Okay. Which is more than anyone has in the stock market. What backing do they have there? Nothing.
Exactly.
So this is a huge step. Now then we link to an index. Let's just say it's the S&P 500 index.
Okay.
So whatever the index is when these folks invest, that's their starting point.
Okay.
Let's assume the market goes up, okay, for the next year. So it goes up, let's just say it goes up 10%.
Okay.
These folks are going to participate in part of that 10%. I can't get too specific on the show here because there's multiple strategies.
Okay.
Generally speaking, they're going to get 25% to 75% of the 10.
Of the growth.
Of the growth. Okay, so in this example, they'll get 2.5% rate of return to 7.5% rate of return on this scenario.
Okay.
Okay. Now this is the cool part. Now that is locked in. So let's split the difference and say it's 5. Okay.
Okay.
So their 100 grand is now 105,000.
Okay.
And that's locked in now. So if the market tanks and goes right back down to the next year, their 105 is still right here the very next year. Okay.
Okay.
So any gains they have get locked in.
Okay.
Okay. Now let's say they invest, let's use another scenario, they invest money today and the market tanks and goes down 10% over the next year. Okay. Their 100,000 that they invested remains level. So this investment You make money when the market goes up, and you don't lose when the market comes down.
Right.
Okay, it's pretty neat. My goal for clients with this type of investment is just 4 to 6%. Okay, that's the goal when using these tools.
Well, that's a good steady increase.
Yeah, people would kill for 4 to 6, and I have folks,
Right.
clients of mine, doing better than 4 to 6 right now.
Okay.
Way better. But again, you know, I don't like to paint a, I don't know, too pretty of a picture. I want to kind of bring it down to reality. 4 to 6 is what folks should expect.
That's the goal you're shooting for
with this strategy.
with that strategy.
Absolutely.
Now, and as I see, I mean, there are a lot of folks, like we've seen over the past, you know, since July of 2011, when the debt ceiling impasse was going on. And, I mean, the stock market was up and it was down, and I'll just about assume that there were many folks who were pacing the floor.
Oh, absolutely.
Now, were you getting a lot of calls from your clients?
No, I wasn't. Yeah, I have hundreds of clients, and I probably got 3 or 4 calls. You know, you could count them on a hand. Most, you know, the couple wanted to just be reassured they're okay. When you use the rule of 100, and when you use strategies like this, you don't worry.
Right.
Because there's just this much money in the stock market, not this much.
So I mean that brings me back to what we've been talking about for many months, is a good, sound financial planner to help you figure out where you should be investing.
Yes, I stress the certified financial planner. That designation is the gold standard in the financial services business. There's a lot of people that call themselves a financial planner. Most of them out there are insurance agents or stockbrokers, and they say, oh yeah, I'm a financial planner. Well, you know, be careful out there. Work with a certified financial planner, and I'm also partial to an independent certified financial planner. One that doesn't work for a bank or a brokerage firm or an attorney's office. Right. Someone that, you know, the buck stops with me.
Sure.
Not my manager or some regional person. It's with me. I own the company. If I do things the wrong way, it affects me and my family negatively. So I make sure I don't.
Right.
This strategy works. This is just one.
Sure.
There are others that we use, but there are options. 4 to 6% is a great, you know, I've been using these for a dozen years, and they work. And they're safe, and they give people sleep insurance or peace of mind.
Sure, absolutely.
Really,
yeah.
they do. And we have others, but just if you want a free report on this particular strategy, again, call at the end of the show or email, and we'll get that out to the listeners and viewers.
Right. And just as a reminder, you mentioned that, folks, 866-626-3990 is that phone number. It's toll free. You can call, and you can get the materials that we are talking about today. You can also email Wayne at todaysretirees.com. Go to your website, todaysretirees.com. That'll take you to Wayne's website, and you can find out more information there.
The financial perfect storm is coming. High inflation, rising taxes, market volatility, longer life expectancy. Let certified financial planner Wayne Maslyk help you create a custom plan to navigate through the uncertainty, not just a sales pitch. Schedule your appointment with Wayne today by calling 866-626-3990 or visit todaysretirees.com. Remember to request the free book, Tax-Free Retirement, when you call. That's 866-626-3990 or visit todaysretirees.com.
Well, Wayne, these are great strategies. We've been talking about a lot of great things on the program today. Looking at this perfect storm, inflation and the stock market volatility, longevity, all of these things, inflation, you know, all these things are coming to bear. We know they're coming. And as you talked about today, about how to hedge ourselves, if that's a good word, about some of these things, it's using a fixed annuity, fixed index annuity.
Fixed index annuity is just another alternative for somebody's repertoire of their whole diversified investment portfolio. This stuff works. They get great rates of return safely. You know, I'm not saying get out of the market. I'm saying if folks were worried, if they found themselves paying more attention to the news than normal, or not sleeping as well, or getting butterflies, then it's time to reduce their risk in the market, plain and simple. And this is just another alternative.
And that's why it's so important to pick up the phone, 866-626-3990, set up that appointment, call Wayne, go over and see Wayne either at his office in Sheffield or in Sandusky. Now, you're going to give away some free stuff.
Yeah, we've been, over the last few weeks, we've been giving away the Patrick Kelly's Tax-Free Retirement, where the book talks about strategies, how to set up a portion or all of your retirement to pay, no or little tax. I have a report we put together for this strategy we talked today, the fixed index annuity. Actually, the Wharton School of Pennsylvania did, a couple of the PhDs there did a non-biased report on these things.
Okay.
And that's what I'm giving away. I mean, this is a business school. It's very respected around the country.
Right.
It's not some advertising, shiny, foo-foo, buy our product report. This is an independent study. And it really opens folks' eyes on the quality of these fixed index annuities and how they can benefit folks.
So if folks are sitting at home or they're listening on the radio today, driving in their automobile, driving in their car, out playing golf, I don't know what they're doing, but if, this will teach them and show them that what you were talking about, I mean, this is a study done to say this works.
Absolutely, or how it works.
How it works.
And it does work. History shows it works. I've been using them for 10, 12 years, and it works. I mean, when I use the example of 4 to 6%, I'm doing that from firsthand experience. That's what they've done. Now, of course, the disclaimer here: we don't know what the future is going to hold because they do link to the markets. They may not average that moving forward, but it's just historically they have.
But the nice thing about the fixed indexed annuities is whatever you put in there is guaranteed to be there.
Yeah, they don't go backwards.
You're not going backwards.
Even when all this bad stuff happens, your money's there.
Absolutely. Well, that's why it's important, friends. Go to the telephone, 866-626-3990. Get the free book, get the free report, and give Wayne a call. We'll see you next time.
Thank you for being a part of today's Retirees. We trust the information discussed on today's Retirees has been a benefit to you. To schedule a no-cost or obligation appointment with Wayne, please call our office at 866-626-3990. A free newsletter is available by calling our office or visiting our website, todaysretirees.com. That's todaysretirees.com. Today's Retirees is a service of Great Lakes Benefits and Wealth Management, Wayne Maslyk Certified Financial Planner, and is sponsored by Great Lakes Benefits and Wealth Management and Allen Thorley Deloitte Insurance. The information on today's Retirees and information on our internet website should not be construed in any manner whatsoever as the receipt of or a substitute for personalized individual advice from Wayne Maslyk or Great Lakes Benefits and Wealth Management.